It's time for the Your Personal Bank Show with Ference Toth, financial literacy educator and speaker, entrepreneur, and chairman of the board of Bank Information. Take charge of your financial future with Your Personal Bank. Now here's Ference Toth.
Welcome to the Your Personal Bank Show. Wow, do I have a lot to unpack today. You know, as many of you know that have been, keep paying attention to things that are going on, our federal government is discussing a number of spending measures, bills, increasing the debt ceiling, and various other things. And it's been a very busy time. Now, the situation is very fluid, so when you're listening to this show, because this is aired on different stations at different times, or you might be listening online at yourpersonalbank.com, some of the information or what's happened may have already happened. So it's hard to say because it's, like I said, a very fluid situation. But I'm going to stick to the bigger picture on all of this anyway. So whatever I have to say basically is going to stay valid, irregardless of what our federal government does decide to do or do, what bills they pass or don't pass. It doesn't really matter. So this is going to be very, very important, very, very valid. First of all, anybody who's listening to this show for any period of time knows that I'm going to say this word one last time. I'm a fiscal conservative, and I think that's a bad word. Actually, I'm just a person who believes in fiscal responsibility, and I think that's something that we need to change. First of all, words mean something, and conservative and liberal and those kinds of things have become sometimes politically charged statements, and so they've lost some of their power, or they give somebody a preconceived notion. Look, I've got a number of clients that are very socially liberal, but are very financially responsible. And I think fiscal responsibility is the key. This cuts across all demographics, all types of ethnic groups, all types of ages, you name it. You're either fiscally responsible or you're not. And a lot of that comes from how you're raised, your belief system, all those kinds of things. Do you want to be a part of society of opportunity or dependency? Do you want to make your own way, or do you want somebody to take care of you, right? So you're either fiscally responsible or not. And some people weren't, paid the price, learned the lesson, and became fiscally responsible. All right. So let's talk about a few of these things and why some of these things are so important and why you need to be paying attention to this. First of all, in the last year or so, our federal government has spent about $6 trillion on COVID relief. They have passed a $1.2 trillion infrastructure bill. The Senate has. They want to pass another $3.5 trillion. That's what they've been arguing about recently. Reconciliation bill, they call it. I call it a big government bill. And we're going to be approaching, no matter what they pass or don't pass, we're going to be approaching $30 trillion in debt by the end of this year. About a year or so ago, we were only $20 trillion in debt. So basically, our country has increased its debt about a third, roughly, in a year or so. Now, that's a big increase in debt. That would be like saying, hey, I bought a $400,000 house and with a mortgage payment, and now I'm going to go buy a $600,000 house. Okay, you've just increased your mortgage payment. Let's say you increase your mortgage payment, say, from $2,000 a month to $3,000 a month with little or no increase of income. I mean, let's face it, for most people, that's going to have an impact on their finances, okay? Now, some things about this reconciliation bill. Like I said, let's call it what it is. It's a big government waste bill. It's to put government in charge and in control of a lot of aspects of our lives. And when you hear, before you turn me off, let me share with you a few of the things that are in this bill. First of all, it was released 5 days before they wanted to vote for it, and it's longer than 2 King James Bibles. Now, if you've ever read an entire Bible, start to finish, how long does that take? More than 5 days. Try doing that twice. In other words, there isn't a single representative that's read the entire bill. There's not a single person that's read the entire bill. Now, I get it. They have staffs. They have teams that can read different portions of it and give them highlights. I understand that. But this is the largest spending bill in human history. Let's put it in perspective. The largest spending bill in human history. Now, we have one of the strongest economies in history, will this spending bill is an existential threat to our economy and our society, our way of life. Will our economy, will our society, will we survive this? I don't know. I'm not convinced that we will, or certainly we certainly will have significant impacts that most people, I can tell you, will not be happy with. Let me give you a few of them, just for example. First of all, let's take business owners. The OSHA fines in this bill, it increases OSHA fines to businesses by 10-fold, 10-time increase. The average OSHA fine for workplace safety out there is $7,000. So it would increase that average fine to $70,000. And they're also combining this with mask or vaccine mandates. And they're in the bill, businesses that willfully choose not to enact the vaccine mandates, enforce them, will be subject to OSHA fines of approximately $70,000 per occurrence. Now, if a business had 10 employees, that'd be $700,000 in fines. Just about every small and medium-sized business that exists in the United States would immediately be put out of business as a result of that. Big business is not against this. In fact, they're for it, because think about it a minute. If you're a large business and you have a competitor and they're getting in your way, a OSHA complaint could literally put your competitor out of business. Isn't that interesting? So again, these are things that have to be considered and understood why these things are the way they are. Okay? Here's another one. This is one that's going to affect literally just about everybody. So this was sold as a way to get the millionaires and billionaires to pay their fair share by. So here's what they've done. In the bill, banks will be required to report to the IRS any transaction in excess of $600. See, currently it's $10,000. If you have a bank transaction, the bank reports that to the IRS, so they're aware of any transactions you make. That's money coming in or money going out of $10,000 or more. They're going to change that to $600. In other words, if my teenage daughter gets a part-time job, her weekly paycheck would be reported to the IRS. Now, how is that going after millionaires and billionaires? Folks, that isn't going after that. It's going after everybody. Literally, we're going to have to start using international banks and things like that just to protect our privacy. It's a matter of principle, not of doing anything wrong. But do you want the IRS peering into just about every transaction or have the ability to review every transaction you do, basically, over $600 without your knowledge? Think about the oversight that this will entail. And folks, whether they pass this or not, it's not important. What's important is the Democrats put this in the bill, which means they want this, folks. This is what they want. This is what they really stand for. They're not going after millionaires and billionaires. Well, they are. No, but they're going after everybody, folks. They want you to pay more. They want you. So if you go have a garage sale and you deposit some money in it in the bank and you make more than $600, the IRS will know about it. Is that an infringement, an encroachment on our lives? Is that democracy? Is that freedom? Folks, that's communism. That's socialism in the extreme. That's Marxism. Our leaders are not progressives. You need to stop using that word. This is another word that needs to change. They're regressive. They're regressing to an inferior form of government. More control, more domination, controlling every aspect of our lives. Look, if you don't want to have the IRS being notified about every transaction you do over $600 in your bank, that's money coming in and money going out, contact your senator, contact your representative, demand them to say no to these portions of these bills. We have got to start creating some financial responsibility and get the government off our backs, not on our. We don't want to put a bigger monkey on our back, do we? Let me give you a few more. If that hasn't gotten you fired up, let me give you a couple more. All right. They want to more than double the IRS budget and more than double the agents they're going to be pursuing collecting more money. Folks, the IRS is nothing more than a collection agency for the federal government. And with the ability of being able to look at every transaction you make over $600 in or out of your bank account, do you think this is going to be oppressive? Do you really want to deal with the IRS on that level? I don't think so. Again, this is the type of stuff that the Democrats want, because this is what they put in the bill. You see what I'm saying? Again, whether this passes or doesn't pass does not matter. They're showing their intentions. Let me give you one or two more, and then we'll go to the next segment. How about this one? You know what? They want to triple the estate tax. So if you did manage to do well and, manage to accumulate some assets, and you want to pass those on to your family, next generation, things like that, they want to triple the tax on that, which would the net effect in many cases would absolutely destroy a family business or a family farm or something like that was one, a multi-generational type of thing, right? Or if you did well and you invested and you did well and you wanted to pass some of that on, tripling the estate tax will go a long ways to destroying the ability to pass on wealth to the next generation. Now, I understand people with less money don't care about that, but some people do. And again, it's about what's right. It's about principle. If somebody works hard, and most of the time when somebody's built a nest egg, they've done this over a lifetime of making wise decisions, many times being very frugal, living within their means, all those kinds of things. So in other words, they did it right. They were financially responsible. Is it right? Is it proper for the federal government then to come in and punish that person by tripling the estate tax and not allowing them to pass that on to those that they care about? Because why did those people do all those things? Many times so they could take care of their family, put their family in a better position, and things like that. Or they had charitable charitable things in mind, things like that. My point is, people shouldn't be punished for being fiscally responsible. We got to start thinking about how we protect ourselves. So I'm going to talk about a few more of these things and then how to protect ourselves. So stay tuned. Don't miss the next segment.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to the Your Personal Bank Show. And like I said, I have a lot to unpack today, so we're going to go through it. In the first segment, we've already talked about, all the federal spending we've seen in the last year or so, which amounts to over $6 trillion. They want to spend another $1.2 trillion in infrastructure, another $3 trillion on the big government waste program. They call it reconciliation, but let's face it, it's just big government control, which we're going to, irregardless whether they spend more money or not, we're going to be approaching $30 trillion in debt. We're a little over a year ago or so, we were only at $20 trillion in debt. That means we've increased our debt by like a third in a year or so, which is crazy, without much more in terms of income. This reconciliation bill, I've already hit on some of the things in it. The thing is, it's a monstrosity. It's the largest spending bill in human history, and this is an existential threat to our economy, to our way of life, to our society. There are things in it that, like I said, it'll increase OSHA fines tenfold, and they're talking about vaccine mandates being being the jurisdiction of OSHA. So companies could be subject to like $70,000 in fines on average per employee. That'll put most any business gone. But here's the one that really gets me. And again, $600 transaction, a bank transaction, anything over $600 will be sent to the IRS from your bank. They're going to notify the IRS about any transaction in your bank accounts over $600. Is that going after millionaires and billionaires? I don't think so. That's going after everybody, and more than doubling the IRS budget, and therefore increasing the number of agents more than double who will be monitoring and frankly bothering you and irritating you and I and the rest, everybody? Do we want this monkey on our backs? That's what it really boils down to. If you don't, contact your senator, contact your congressperson, and demand that they vote no on this stuff, okay? Even if they pass it, don't pass it. This is what Democrats want. Keep this in mind. Don't forget this, okay? We're in damage control now. Obama was right. One thing he was right about, I'll give him credit. He said elections have consequences. He was right. This is the consequences we're dealing with, but an overbearing big government, socialistic, Marxist group of people that want to just dominate and control every aspect of our lives. They want to triple the estate tax. But let me give you another one. They want to tax unrealized capital gains. Now, most of you understand what that means, but if not, let me explain this. Capital gains tax occurs when you sell an asset that's not is considered passive income. So things like when you sell a house, when you sell your house, and if it's increased in value, there's exceptions for personal residence. But if you have real estate and you sell it, and it's worth more when you sold it when you purchased it, there's a gain, the difference. So if you bought a property, for example, for $100,000, and then you sold it later for $200,000, you could have a capital gains on that. You'd have to pay taxes on the difference. Okay. Now, historically, for quite some time, long-term capital gains rates have been 15% for those with folks over a certain income level. Okay. Well, now check this out. Whether you sold a stock, whether you sold a piece of property or whatever, if it had a capital gain, if it increased in value from when you purchased it to when you sold it, then you would, of course, incur a capital gain. You pay the tax on the gain many times. Well, they want to tax unrealized capital gains. Now, what is that? Well, let's use a quick example. Let's say your house, let's say you're not super wealthy. Let's say your house is worth $250,000. That's actually less than the average house in Phoenix market, certainly in most markets in the country today. But let's say in a year, your house increased in value by 10%. And let's say you had investments. Let's say you invest in the market or stocks or bond, mutual fund, whatever it is, doesn't matter. And let's say you had $100,000 invested. Okay, so you've got some money invested, but you're not wealthy by I don't think most anyone's measurements. And that increased 10%. So you'd have an increase of 10% in your investments, went from $100,000 to $110,000. That $10,000 increase, you'd be taxed on that, whether you sold it or not. In other words, you just had it in your account, you bought these stocks or whatever, and they went up in value 10%. Guess what? You get to pay taxes on that, whatever the current rate, whatever the rates are that they decide, which we don't know yet, you would get taxed on that. If your house went up in value, now there may be exceptions for personal residences and stuff like that. Who knows? Who knows what rules are going to put in place? Rental properties. What if the rental property increases? It's $250,000. Now it's increased 10%. You owe taxes on the $25,000 increase. In my example, you could have $35,000 in increases that you could get taxed on if you had a property and some investments, let's say. Now, here's what's really interesting about all this. Let's say 1 year you had the gains and you had a taxable event, you paid the taxes on it. What happens if the next year they lose value? Are you going to get a refund? I seriously doubt it. So in other words, they want their cake and eat it too. They want to tax us on unrealized capital gains. And then when we have capital losses, then what? Or unrealized capital losses. You see what I'm trying to say? You see how convoluted this is and how intrusive, that's the word I was looking for earlier, how intrusive the IRS will have to be in all of our lives to accomplish this kind of stuff. And again, don't forget, folks, this is what the Democrats want because this is what they put in the bill, whether it's passed or not. Doesn't matter. This is what they want. They're showing their colors. Remember this. Remember this come election time. Now, here's a couple other things. Biden and others have come out and said that this $3.5 trillion thing was zero cost. Are you kidding me? Do I even need to explain this to people? I mean, what a joke. I mean, that you talk about economic illiteracy. Well, they're not that illiterate. They just think we're that stupid. They just, the only conclusion I can come up with is they think we truly are that stupid. I've said this many times on this show. The government has no money. Period. Let me say it again. The government has no money. The government doesn't create jobs. They do not create income. They don't do any of that. The only way that it drives me nuts when politicians talk about these job creation bills. Government doesn't create any jobs. Business creates jobs. And by the way, if the government creates a government job, who pays for that salary for that government employee? You and I, the taxpayer. See, that's how government gets its money. They either tax people or they print it. They buy bonds and they print it, which creates inflation. That's the two ways for government to get money. And both are bad. One, the taxpayer pays, and inflation, everyone pays. Okay? Now, and here's the thing. There's people going around saying that this is zero cost to this bill, this $3.5 trillion bill. Are you kidding me? The government has no money. It costs 3.5. If it's going to cost 3.5 trillion, it's going to cost that taxpayers are going to have to pay, or they're going to increase inflation by that amount, which is an incredible amount, which everybody will pay for. Now, the Congressional Budget Office, which is nonpartisan, says, oh, I love this one. Biden also says he's not going to tax anybody with over $400,000 in income. The Congressional Budget Office says this bill will tax people down to $30,000 annual income. Which do you believe, the politician or the Budget Office, which is nonpartisan, full of CPAs and accountants and those kinds of people? Again, which do you trust? Which do you listen to? We're going to talk about some more of these things. It's really important, so don't miss it. So stay tuned in the next segment.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to the Your Personal Bank Show. We're talking about the government spending that they've been talking about recently. And again, this is a fluid situation. Depending on when you listen to the show and which station you listen to it, or if you listen to online at yourpersonalbank.com, some things may have already happened because, again, it's changing daily. But the big picture is this. So this is all going to stay very valid. The things that they want to do are just intrusive in the extreme. And what I mean by that are things like increasing OSHA fines by tenfold on businesses, which would be disastrous for any small or medium-sized business. Requiring banks to report to the IRS any transaction over $600. Folks, that affects just about everybody. My daughter, teenage daughter, took a part-time job and got paid weekly, that would be reported to the IRS. Do we want that level of intrusion in our lives, the IRS in our lives? In addition, this bill more than doubles the IRS budget and more than doubles the agents. So guess what? We get a lot more interaction with the IRS. Boy, that sounds like fun. They talk about taxing unrealized cap gains. If you missed what that means, go to yourpersonalbank.com. Listen to the previous segment. I discussed how that works. That is a bad, some goes up in value, you pay the tax. If it goes down, I don't think you're going to get a refund. And that's crazy. Biden has also said he's not going to tax anyone who earns over $400,000. Yet the Congressional Budget Office has stated that this bill will tax people with incomes over $30,000. Anyone over $30,000 in income will be affected by this tax. Do you believe Biden, or do you believe the Congressional Budget Office, which happens to be nonpartisan auditors, basically? Look, the government has no money. When they say the zero, oh my gosh, zero cost, come on, give me a break. Are we that foolish to believe it? The only way the government gets money is by taxing us or printing more, right? And why this is so important, and Senator Manchin, who thankfully, one of the two senators, including our Arizona Senator, Sinema, have been standing. I hope they both stay firm on this and have said no to this. They're talking about compromises, and by the time you listen to this, maybe I'm not holding my breath. But gosh, we're in damage control. When Manchin said he went from 0 to 1.5 trillion, he couldn't go to 3.5 trillion as a compromise. I'm like, zero is too much. Anything over zero is too much, in my opinion. But at this point, I mean, like Obama said, elections have consequences. If we get stuck with 1.5 trillion or something like that, It's better than $3.5 trillion. It's damage control at this point. You see what I'm trying to say? And elections do have consequences, so don't forget this. Don't forget who wanted to keep track of any transaction you and I made over $600 in a bank. It's the Democrats. They put it in this bill. They're showing their colors. Don't forget this come election time. But Senator Manchin stated Medicare is going to be insolvent in 2025 and Social Security in 2033, according to the Social Security and Medicare trustees. These are the people in charge of keeping track of this, telling us that it's going to be insolvent. And these monstrosity, these bills, do nothing for Social Security or Medicare. So what then? We spend all this money. We spend ourselves into oblivion. We have the greatest amount of debt in human history of any country. And then Social Security and Medicare start to fail. Then what? What are we going to do with those people? You see what I'm trying to say? This is a existential threat. This is a threat to our economy, to our society, to our way of life. I don't want to be an alarmist, but folks, if you haven't waken up and smelled the coffee, now's the time. Contact your senator, contact your congressperson, email them, call them, write them, tell them no. Fiscal responsibility, and that's the proper term. Not being fiscally conservative. Fiscal responsibility, because I know many conservatives that are not fiscally responsible. I know many liberals who are fiscally responsible. Folks, this cuts across all grains. You're either fiscally responsible or not. We either gain some fiscal responsibility in this country or we're going down the tubes. And there are just no two ways about it. And we're talking about 1970s type of economy or worse if these things continue down the path they're going. Okay? That is the facts. Okay? That's what we need to understand. See, why are they pushing all this? Why are they pushing this so hard? The Democrats have convinced themselves that if they pass all this and give all these freebies out, all these goodies to people, all this money, that they're going to reward them by voting for them. And I'm sure there will be some people that will. They're convinced they're going to be rewarded for giving away free stuff. The problem is they're going to destroy our economy, destroy businesses, cause much higher inflation, higher taxation, and basically destroy our way of life. Are they going to get rewarded for that? I think not. I certainly hope not. We're going to talk about in the last segment what to do to protect yourself. Contact me at yourpersonalbank.com and stay tuned in the next segment so don't miss it.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to the Your Personal Bank Show with Ference Toth.
Welcome back to the Your Personal Bank Show. And today we're really talking about many of the spending measures and things that our federal government is doing that are frankly fiscally totally irresponsible. I'm going to give you one more. I've talked about the reconciliation and all the spending. The biggest thing to me is requiring banks to report transactions, anything over $600. You have money going in or out of a bank, and the IRS is going to be notified about that. Do you want that level of intrusiveness in your life with the IRS? I think most people, the answer would be no. Spending ourselves into oblivion. I get asked about a lot of people, and this is one of the things I've shared a lot is, what do we think is going to happen if indeed many of these measures come about? Remember, don't forget, who wanted to have the IRS know about every transaction over $600 from your bank account? The Democrats. They put it in the bill. Don't forget that at election time. Is that the kind of life, is that the kind of society that you want? I think the answer for most people is no. But anyway, think about that. Don't forget this. Fiscal responsibility needs to be the buzzword, needs to be important. And this is the last thing I want to say. They passed the temporary spending bill to keep the government open through into December to prevent a shutdown. Frankly, in my opinion, a shutdown is not only a good thing, it's preferable. Look, if a business doesn't have enough money, what do? They cut back expenses, right? I mean, we have, by the government's own admission, non-essential government employees. My first question would be, why? Why do we have any non-essential employees ever. But we got the government's in massive debt. We owe a ton of money. Why in the world would you keep any non-essential employee on? Let's start there. Immediately, just by their own definition, get rid of them. That's something like about 20% of the employees that we have, that the government has. Really, we have. Who's paying for it? Anybody who's a taxpayer, right? And by the way, if you're not a taxpayer, because it's true, about half of Americans pay taxes and about half don't. I know Mitt Romney got slaughtered for that statement, but it was accurate. It's a facts, okay? Here's the point. Even if you don't pay any tax, when the government borrows and prints money, like they've been doing like crazy for the last decade, roughly, there's more dollars. More dollars are created to chase product, goods, and services, which creates more inflation, which means everyone pays more. You pay more for food, housing, clothing, and anything else you spend money on. So whether you are paying taxes or not, doesn't matter. When the government spends money, you are affected. We all are. Okay? That's the thing. That's the education piece. That's the piece that we need to understand. Please help me share the word. Share the news. Let people know. We all are affected. Okay? There's no such thing as free money. The government has no money. Okay? Now, fiscal responsibility is the key. And this is very, very disappointing to me because in this temporary spending package to keep the government open, which doesn't need to be open, let's face it, it doesn't hardly affect anybody when it shuts down. We don't miss it. In that package, to keep the government open until December, it's over $6 billion in there for Afghan refugees. Last I heard, 3% of the refugees that have been brought over actually worked with our military. 97% didn't. So there are people, many of them, people that do not like us, that hate us. Not only we rescued them out of a war-torn country, we're going to pay them to resettle in our country. When have you ever heard of a country taking care of refugees that we airlifted out of there, did nothing to help us, and in many cases we haven't vetted at all, we have no idea who they are, in many cases hate us. Yet we're going to pay them to resettle. But we won't take care of our own vets. We won't take care of our own homeless. We won't take care of our own business owners. What kind of country are we living in? What kind of leadership do we have? These people are absolutely either completely and totally clueless, which I do not believe. They are power mad, power hungry. They want to change this, fundamentally change this country, which is what I do believe, and fundamentally just evil. These are people that want power, they want money, they want control at all costs. They don't care about you or I or anyone else for that matter. If you're not part of their group, their elite, they don't care about you. You don't matter. And I think that's the truth. Don't forget that. Here's the thing. I know we're suffering from crisis fatigue, and I think that's intentional. You have, Afghanistan debacles. You've got the border people pouring into the border. You've got our federal government spending money like a drunken sailor. Mask mandates, vaccine mandates. It just goes on and on and on. And it gets fatiguing. I get it. They're doing this to us on purpose because they want to fundamentally change this country. They want power. They want control. Look, I don't know a better way to share that than they want to hire more IRS agents to track bank transactions of $600 or more so they can tax us more, take more of our money, control us more, and be more invasive in our lives. I can't think of a more direct situation than that. How do you protect yourself? The first thing I'm going to say is contact me at toll-free 866-268-4422 or yourpersonalbank.com. Again, this is a very fluid situation. Not all the details are out yet in this huge bill and what's going to happen, what's going to pass, and what's not. But it's becoming increasingly clear, obviously, if the banking system will be forced to report transactions of over $600, for example, to the IRS, it basically means you're going to have to avoid the banking system as much as possible. And it may be a little easier said than done, But there are some things that can be done. International banking is going to become a much more common option, for example. And I'm not saying people are going to do this because they're trying to hide something or they're doing anything unethical or illegal. Folks, this is a matter of principle. Just flat out a matter of principle. Do you really want to be dealing with the IRS? The less they know, the better. They don't need to be that intrusive in our lives. It's none of their freaking business, in my opinion. Obviously, they have a different thought process on that. Going to have to learn to transact monies in a different way. And here's what's interesting. I'm going to probably get really, really busy. Here's the ironic thing about this. By setting up insurance policies, high cash value policy to earn dividends, then access the funds through a bank line of credit, that transaction is a loan, so it would be reported, again, more details forthcoming as we move forward on this, but it would be reported as a loan and not as income when you received it from the bank line, which would be helpful in terms of, doing transactions, obviously. You're going to want to have to start taking loans against assets is what it boils down to, like many of the wealthy people do, or get taxed into oblivion. I mean, it's going to force people to start changing their actions or die on the vine financially. And one of the things I've shared this so many times with my wife shared this so many times, and I share this idea is, if you want to win the game, you got to learn. The key is you got to learn the rules. And trust me, whatever's in this bill, my gosh, it's longer than 2 King James Bibles. There's no one on earth has read it all yet, nor have they had time. There will be loopholes. There always are. There's legal loopholes for the wealth, mostly the wealthy, typically who benefit from this, because what they do is they hire people like me who learn the details, learn the legal loopholes, and share with them how to legally reduce taxes. Every tax bill that's ever been submitted has legal loopholes in them. This one will be no different, okay? Don't let them fool you. This is not about taxing the millionaires and billionaires, because guess what? The millionaires and billionaires will hire good counsel, attorneys, CPAs, and various people to help them. The average American, the middle class, will get stuck footing the bill, as they always do. And no, it's not zero. That's such a joke. That's so ridiculous. The cost is not zero. The government has no money. They can't. If they spend $3.5 trillion, it's going to cost $3.5 trillion either in taxes or increased printing of money, which creates more inflation. Like I said in the last segment, my best guess right now, like I said, history doesn't repeat itself, but it rhymes. That's Mark Twain. What's clearly happening with all this extra spending, inflation, even the Federal Reserve has stated recently that the inflation they kept saying was transitory. Well, now they're finally admitting that it's not so transitory, that it's probably going to be with us much longer than they originally would willing to admit. Okay, we all knew better, but whatever. We're going to have higher inflation. That's what it looks like. We're going to have higher interest rates. Looks very likely we're going to have higher taxes, and we're going to see a slowing economy that will negatively affect most companies, the stock markets, things like that. If interest rates climb, that will. Let's face it. There's nobody reasonable person can argue the fact that real estate values are high because interest rates are low, so the cost of purchasing a home is cheap. Interest rates go up, the values of the properties will go down. That of course will vary in different markets, because you have some markets like Phoenix where people are moving in still, so some of that will be offset. Others will be devastated. My point is simple. There's going to be a lot of changes, and I think the closest rhyming that I can see, and of course this is recorded, so you can call me on it down the road, and it'll be on my website, yourpersonalbank.com, if I'm wrong, but if I had to guess, if I was going to bet on this, I think we're going to see something closer akin to a 1970s kind of economy than anything else that I can imagine. Again, higher inflation, high interest rates, and slowing economy, stagflation, those kinds of things. How do you protect yourself from that? You need highly interest rate sensitive assets. You need to be, looks like, again, depending on what's passed, get out of the banking system as much as possible. Okay, it's going to be impossible to completely avoid it, but certainly reduce your footprint in the banking transaction sector is probably a smart move going forward. You're going to need to reduce your taxes, because as taxes increase, you need to create some tax-free buckets of money. Again, your personal bank accomplishes all of those things. Creates that tax-free bucket of money, creates some guarantees. It's highly interest rate sensitive, so historically, dividends have been much higher than they are now. I mean, they're 5.75 to 6% now, with the lowest interest rate environment in anybody's lifetime that's listening to me, literally. So my point is simple. Diversification into things that you are different than what you've done the past decade. Look, what's worked for the past decade is probably not going to work for the next decade. So it's time to start thinking about repositioning some of these assets. And again, your personal bank is a very viable one to consider if you want to reduce taxes, if you want a highly interest rate sensitive asset, if you want to reduce your footprint in the banking sector, all of those kinds of things. You want to, you gain more control of your money, get out of the, the government retirement system, or reallocate some funds here instead. Your personal bank is going to be a good fit for that. So I'm going to say contact me at 866-268-4422 or yourpersonalbank.com for more information. The last thoughts I want to leave on this is, as frustrating as all this stuff is, and like I said, it's crisis fatigue, but from the fiscal responsibility standpoint, the financial standpoint, I'm torn. Because as they make this more complicated, more difficult, and all this stuff changes, I will get more busy. There's no two ways about it. But it's bad for America. It's bad for the average American. We'll put it that way. And that's why I get frustrated, because I would rather, I'm busy enough as it is in normal times. I would rather see everybody succeed and be happy. But unfortunately, we're not in those days today. So stay tuned to the Your Personal Bank show, and we'll keep you on top of all these issues as we go forward.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. This show is designed to provide accurate and authoritative information. The presenter and guest on this program do not engage in legal, accounting, or tax advice. Professional advice regarding your situation should be sought if required. Products and riders may have limitations and may not be available in all states. Excessive unpaid loans may affect performance. Distributions may become taxable if not managed properly. Replacements may not be suitable for everyone. There may be charges when replacing coverage. Compare when considering a replacement. Dividend rates and baseline of credit rates may change. Contact yourpersonalbank.com for current rates.